Good afternoon, everyone. Welcome to EGU. This is a short training session for commercial finance advisors in the commercial finance division. I'm going to talk today about how to properly, adequately, and completely submit a complete file for a commercial finance request. I'm going to go through this quickly, but you should be able to take notes, and I do want you to email me if you have questions. If you need any of the documents that I show you in this session and you want to have those at the ready on your hard drive for future prospects, just let me know. I can send them out. And I'm going to give you the standard patent package to submit a complete file. And we're going to go through that right now. I'm going to begin screen share. And I've got several items already loaded up on my computer ready for this session so that I can get to them quickly without delay. I'm going to minimize the sidebar for the GoToMeeting. I'm not going to then be able to see your questions right away, but I will open it periodically to check and see if I've got any. So let's get started. So I guess the best way to begin is with which items we need to collect to submit a complete file. So when you have a client or a prospect, business owner, commercial property owner, someone who wishes to acquire such an asset, a business or commercial property, or a large residential multifam property, 5 units or more, these are the items we need for commercial finance submission to our commercial finance lenders. So first and foremost, I'm going to show you these documents that I have the blanks for, but I'm going to go through them quickly here on the list first, and then I'll go to show them to you, or maybe I'll mix that up. So let's start with first and foremost, we need a commercial loan application. This must be completely filled out, and now that I think about it, I am going to show you as I'm talking about each item. Okay, so here we go. Commercial loan application. It's a simple document. It's 4 pages total. If you see here, it starts with company name, the address, city, state, zip code, company website if they have one, tax ID or social security number. So if it's a sole proprietorship, it's probably going to be based on an SSN. Or possibly if it's a partnership or an LLC or corporation entity, then it's going to be having the tax ID, and you'll need to put that in here. These are fillable PDFs, by the way, so you can send these to your client or prospect electronically, or you can just complete it electronically for their signature. I suggest you do it with them. If you're going to do it that way. You're going to want to check the type of entity. Proprietorship, partnership, corporation, LLC. Give a description of the business, what they do, not the history of the business. This is not a place to put in their marketing plan or anything like that. It's just a very simple description of what kind of business it is, what they do, or what their primary function is. Very brief, very quick. Date established. You should know that because we need to know what the history of the business is, what kind of history they have. Is the business a franchise, yes or no? If yes, please submit a copy of the franchise disclosure document and the franchise license agreement. These would be the paperwork that they had when they initiated their franchise agreement with the franchisor. So as a franchisee, then they're going to have these documents. So if your answer here is yes, you're going to want to get these documents from the client and have them be part of the total submission of a complete package. Number of current employees, if they count themselves as an employee and they collect they draw a salary as an employee, albeit the CEO or whatever, then they are an employee. So they would count themselves and then whatever other staff or employees they have. Every partner is not necessarily an employee. Only those that, again, draw a salary are employees and have a titled position for the company, presumably to provide some kind of service or some kind of function to the benefit of the company. Estimated number of new employees after loan. This is just a key tell, because if the money being sought is for business expansion, or that expansion can come in the way of acquisition of another location, if it's a restaurant, for example, or they're going to add a wing to a hotel, whatever it's going to be. If it's going to create new jobs, then you want to put the projected number of increased employees in this space here. So that's about the applicant or the company information, the top section. The second section deals directly with the loan request. So what is a loan amount requested? That's very simple. If they're purchasing a piece of real property, a real estate asset, for example, no need to factor the down payment. If you want to, then you can, but let's say if it's $1 million purchase, you don't have to factor, okay, well, they're going to put 25% down, so the loan amount is actually $750. If you want to, then please do that, but it's not necessary. So you could just put $1 million here for the acquisition of property. Just type that in there. Primary use of loan, you would put that here, acquisition of property, expansion of business, working capital, whatever it might be, you want to type that in here. The primary use. Again, don't get very detailed with bullet points. Well, we're going to buy this piece of equipment, then this one, then we're going to upgrade the kitchen area. You don't need to go into that type of detail. Just give the primary purpose of the loan. Collateral description. So what kind of collateral do they have? It can be the asset being acquired. It can be equipment that they have on the manufacturing floor. It can be personal assets, primary residence. So just give a brief description of what the collateral they intend to pledge for this new loan is going to be, what that looks like. So if it's real estate acquisition, then here's where you would put that. So if it's a $1 million purchase, you would put $1 million here. The dollar amount to cover this aspect or that aspect or whatever it is. So put the numbers here, and then you'll get the total loan request here. So if it's to purchase an asset that needs improvements, then you'd have a number here and a number here. If it's to acquire a business and you need inventory or working capital, then you have multiple lines here with numbers, and you have a total down here. So this section here, obviously, it's like I said, this stuff is very straightforward. It's not rocket science, folks. So right here at the top of the section, this is a section that deals with a real estate purchase. So if you're not, if your client or prospect's finance request is not for the purpose of acquiring real estate, then obviously this section would be blank. If it is acquiring real estate, then the address of the proposed building. So the address up here in applicant information, and believe me, I get this all the time, people put the address of the building to be acquired or whatever. This is about the company. So what is their business address? We try to not have P.O. boxes. We need a physical address, but if that's all they've got, then we'll work with that and cross that bridge later, maybe in underwriting or deeper into processing. So again, for real estate purchase, what is the address of the building being acquired? You're going to put that again here. I don't know why that redundancy is. I guess just put the street address here and again here, and then city, state, and zip. Market value. You can estimate the market value, or you can put, if you don't know it, you can put the purchase price here and again here. Square footage of the building, you're going to need to know these facts, folks, so get with it. You're going to have to get a listing sheet where all this information is readily available in clear view. You can just transpose it from there to here. What is the square footage of the building? What is the square footage the company will occupy? So they could be purchasing a commercial asset to move into part of the building and lease out the other spaces. So are they going to occupy 100% of it, or are they going to occupy just a portion of the building? This is a note here. SBA requires your company to occupy at least 51% of an existing building and 60% of a new building initially. initially, so you can reduce that or increase that after the fact, but initially those are the requirements for to go SBA with your prospect. And that's not to say that you have to, because you can do conventional non-government backed or non-SBA financing to acquire these assets. But if you are going to go SBA, one, you're going to have a lower down payment most likely for your client, and then also you've got to follow these guidelines, and there are others as well. Escrow closing dates, you can estimate that for real estate acquisition on a commercial side. You can estimate 45 to 60 days. Put the realtor's name, because the lender is going to want to make contact directly with the lender, as will I as a processor. The phone number for that realtor, obviously. And if known, how will the property be vested? So if there are any tenants that will remain in the subject building, please provide the following information. Also, please have your realtor or broker provide copies of all existing leases. In commercial, folks, commercial real estate, that's called the estoppel. So you have estoppel agreements, especially for larger buildings or buildings with multiple tenants, and the estoppels will suffice instead of the actual physical leases, the total leases. So if you can get estoppels, an estoppel is agreement, basically a document that in a buy-sell transaction for commercial real estate with multiple tenants, the property manager or the seller or one of their agents or someone on their behalf will go around to each tenant with these documents, and each document says, okay, I am ABC Corporation, and I occupy suite 210A of this property address, and I am currently in a lease which expires in another 16 months on such and such a date, and my monthly lease rate is this with an annual increase of this. So basically it's just them attesting to a document which stipulates the terms of their lease and their tenancy. So it summarizes their tenancy, and they have to sign it, attesting that these facts are true and correct. So then in the disclosure portion of the real estate deal of escrow, they're going to hand that over to the buyer or the buyer's agent, so you can review the estoppels, again, without having to review, possibly 50 100-page leases. So it's just a summary document which the tenant signs during the disclosure phase, so that the buyer can get a look and have a true picture of the tenancy of the property. And you would fill all that information in here from that. So if you have more or multiple ones, you're going to want to use a separate sheet, and you can make that an addendum to the purchase contract or Exhibit 1. I'm sorry, not the purchase contract, this commercial loan application. Existing business locations, so if they're already in business and they've got multiple locations or branches or what have you, then you're going to want to fill in this information here. Their references, financial references, so bank name, account numbers, their agent or officer at the bank, and the phone number to contact that person. So now here is the applicant company ownership. So who are the partners? So who is applying for this loan? Now it's important to note that in a commercial deal, the entity, the company, the loan is in the company's name, but for every commercial deal where there's recourse, this doesn't apply for non-recourse, of course, but where there's recourse, there must be a personal guarantor for the debt. So someone to step up and be the PG of the company. That person must typically be a minimum 20% stakeholder or have 20% equity in the company to be the personal guarantor for the debt. But if they're going to be multiple guarantors, then that's fine as well. But just understand, if every guarantor must have at least a 20% ownership in the company. Right here is where the lender wants to see and understand the makeup of ownership. So you don't just put the guarantor's name here and their ownership percentage, you list everybody. And again, if there are more partners and you have spaces here, you're going to use a blank sheet and attach that to the application as an addendum or a further exhibit. We're going to want the socials for the person as well, because we may need to run credit if they are the guarantor. It's pretty much straightforward. I'm sure you've all filled out applications before, so again, it's not rocket science. You just have the client complete the application. Again, it must be complete. They can't complete what they feel to be the pertinent sections because, excuse me, but they frankly probably don't know. And that's not their choice. They need to fill out the application in its entirety, or at least to the absolute best of their ability, and we'll circle back to them if they've left things blank that we need filled out. Any affiliated businesses, if applicable. If it's not, then leave it blank. If it's not applicable, then just leave it blank. Additional questions, and then the authorizations and signatures. So we're going to want the printed name and signatures. Now, every owner of the company doesn't have to sign and date here, just the guarantors. So if there's one, then that'd be one. If there's 2, 3, then we're going to need the guarantors to sign with their authority. One of the reasons, again, that they must be a minimum 20% stakeholder in the company to be able to sign this document on behalf of the company. So let's go back to our list. That's the commercial loan app. Checking questions. Let's see. Okay, so we've got no questions there. Pretty good, simple, straightforward. So let's go back to the list. Where are we here? Right. Okay, the second item we need is a personal financial statement. Again, completely filled out. The personal financial statement is not for every owner of the company. We need a PFS for the guarantor of the loan. So again, as I said a moment ago, the loan is in the name of the company, a recourse loan, which most debt is. You're not going to find too many non-recourse deals or product in the commercial side, in the commercial realm. People whine and complain, so they want non-recourse. Well, if to a lender, you've got to look at it from the lender's perspective. If you're a business owner and you want a non-recourse debt, then do you know something that we don't? Or are you going to beg out of this business 6 months down the road when it starts to go kaput? So it shows a lack of confidence and commitment from the borrower in their own business or venture. So most commercial debt is going to be and require recourse. So that's going to require someone, again, in ownership with a 20% or greater stake in the company to step up and be the personal guarantor for the debt. That person is called, again, the personal guarantor, and they are the one with their information that completes the personal financial statement. So let's take a look at that document. It's called a personal or individual financial statement. Again, I'm not going to go through this line by line because it's pretty much straightforward. We need the information, the name and contact info, residence info, primary residence for this person. We need their assets and liabilities. Please have them fill this out completely. This isn't where you just put, oh, I've got, $3,600 in checking. We need their complete information financially and their liabilities as well as the assets. We're putting together a balance sheet for this person to gauge their financial health, to gauge and determine their ability to be the guarantor for this debt on behalf of the company or the entity. So we need this personal financial statement completely filled out. I can't tell you how many times I've gotten personal financial statements where whole pages are blank. And come on, this is commercial finance. It requires a skill set, a diligence that you just simply must have, or you must look for something else to do. I hate to be basically having that type of tone or attitude, but this is such basic stuff, and to be able to get complete documentation from some of the folks is so frustrating that I can't understand why. We're all adults, we're professionals. This is a big ticket, big money business. The average commercial deal is $250 to $2.5 million. Those are large commissions, so the very least you can do is make sure the darn paperwork is filled out completely and correctly. I hope you're gauging my frustration because it's just that simple. The personal financial statement is 2 pages long. If your client's never seen one before, hold their hand, get the information, help them fill it out. That's your job. You are their commercial finance advisor. It is your job to know this stuff. It is your job to help them get it completely filled out, to help them get the funds they're trying to get to support their business. So that's the personal financial statement. Again, all of the information you see here as I'm scrolling back and forth and up and down, it's not about the company. It's not about the business. This is their information. We need to know specifically the financial health of the guarantor. Let's go back to our list. Number 3, the business financial statement. So now here is a similar document. Let's pull that document up so you can get a good look at that. Business financial statement. So the business financial statement, just as the personal financial statement was for the guarantor, the individual who's going to be the personal guarantor for the debt on behalf of the entity, to paint a financial picture and gauge the financial health and do a financial assessment essentially on that individual, this form is to do the same for the business. In commercial finance, treat the company or the entity as a person. It has a social security number. You call it a tax ID. If you look at it closely, it's the same amount of digits as a social security number. Tax IDs are essentially social security numbers for entities. So the entity is the third person or the 12th man or the 6th man, as they would say in basketball. So the entity is hugely considered or a huge factor in consideration of whether the loan will be granted. So the personal guarantor is one, but the entity is the actual borrower. So of course the lender is going to want to gauge and assess the financial health of the business. Now a lot of you are saying, well, what if it's a startup? Well, startup loans are hard to get, first and foremost, so maybe you shouldn't target those types of loans. But if it is a startup, then obviously you're not going to have this. Then what you want to do is probably fill out multiple personal financial statements for the partners forming or starting the venture. So if you've got 3 partners, instead of just putting forth a guarantor, if you don't have an existing history with the business, and therefore we're still going to want the business financial statement, because even a startup has an open bank account or some money where they've made an initial deposit, hopefully. If they don't, then they're probably not far enough down the road to qualify for any sort of finance. But we'll get one, but it will be presumably very thin. There's not going to be a lot of information here. So in lieu of that, and to substitute for that, we want to get a personal financial statement for all the partners in the case of a startup. But in a regular existing business, we want the personal financial statement for the guarantor and this statement here for the business. So we're talking about the name of the business, not the residence address. Let's get the business address here. And then let's talk about the assets of the company. Do they have vehicles, equipment? If it's a manufacturing company, they've got equipment on the plant floor, presumably. If it's a restaurant, they may own the oven and the fixtures, the warmers and so forth in the restaurant. That all has value, and they're all assets of the entity. So we're going to need those. If it's a trucking company, how many vehicles do they have? What is the value of those vehicles? So we're trying to assess all of the value of all of the assets, including cash and liquidity, for the business. Likewise, we want liabilities for the business, accounts payable, banknotes, monthly payments, life insurance, or insurance for the building that the business might own. Whatever it is, we're going to need the information both for assets and liabilities for the entity, for the company now. Again, it's a simple 2-page document. It's not any longer than a personal financial statement. It's not any shorter. So again, the person signing the statement can be the guarantor for the debt, but it can also be anyone else in the company who has the authority to sign such a document on behalf of the company. Whatever that might be the CFO. So maybe the CFO prepares this, but a capital investment partner is going to be the guarantor. So it doesn't have to be signed by the guarantor, but it's got to be signed by someone who has the authority to do so on behalf of the company. So that is the business financial statement, the personal financial statement, and the commercial loan application, completely filled out and turned in. Not individually, but I want all of these things as a package. So those are the blanks. So again, as I said when I started the session today, if you don't have these documents and you want to have them at the ready on your hard drive so you don't have to request them each time you get a prospect, I'm happy to send them to you. They're fillable PDFs. Keep them on your hard drive. Whenever you have a new prospect, generate from your hard drive and send them to the prospect. That way you'll always have them. Now, in addition to these blanks, the forms or documents that you need to have filled out and signed or executed by your client, I'm going to need tax returns. Again, remember, in commercial finance, the entity is the borrower. However, there is a guarantor in a recourse scenario. So everything we need for the individual borrower, we need for the guarantor as well. That's one of the, and there are many, but that's one of the differences between conventional or say, commercial and residential finance, is that we need to qualify both an individual person and an entity. So not just personal tax returns. We need the business tax returns for the last 3 years, presumably showing profitability. That would be very nice. We also need the last 3 years of personal tax returns for the guarantor. Again, not for all of the owners of the company, not for all the partners, just for the guarantor. We're always presumably in a year, in the middle of a year where taxes have not been filed yet. So we'll need the last 3 complete years tax returns, both business and personal. And then we're going to also need a year-to-date P&L or profit and loss or balance sheet for the year that we're in. So we're now coming to, as I'm making this recording, toward the end of 2015. So no taxes have been filed just yet for 2015. So we want a year-to-date P&L for 2015. As we turn the corner, let's say we get past April, we're into May of 2016, then we're going to want to have 2015 included in the last 3 years tax returns, but we're going to want a P&L, a year-to-date P&L for 2016 then. So that would be January through May. That's what year-to-date means, from the beginning of the year to present. Lastly, we'll need a credit report or estimated FICO. We must have for the guarantors. So if they don't have a credit report, that's okay. We'll pull one. It'd be much better if they had one, but you're going to have to be able to estimate the FICO score for this person. They should have some estimate within reason or proximity for their own FICO score as a personal guarantor. You may also want to include anything else which demonstrates the financial resources or history. And again, the personal and business tax returns, I can't stress that enough. Sometimes I get one set. I'll get either the personal or the business. I need both. Important to note, if the client does not operate as an entity, a business, if they're just a sole proprietor or they operate as an individual or a DBA, doing business as, then obviously they're not going to have items 3, 4, and 5. 3, 4, and 6. They're not going to have a business financial statement. They're not going to have last 3 years business tax returns because they don't file as an entity. They may file their business income on their personal tax returns, and we'll need to make sure that we have that. They wouldn't have a year-to-date P&L possibly. They could probably create one. It wouldn't be an audited financial, but they could probably create and put together a P&L, and if they can, that's going to support their case and make the loan that much more likely to be funded. If it's a piece of real estate or real property, if the building is earning income, then please do submit earning statements or the P&L for that asset. So any such asset that's earning income in business has a profit and loss. There's profit and loss. So we're going to need the P&L for the building, for the actual property. So that's the total list of items that are needed. in a commercial finance deal. There are some other supplements that particularly SBA might require, but you don't need them in the initial submission. If we need them, I'll come back to you, or the lender will come back to you directly to acquire these items. This is one such form. It's a history of the business. If you want, you can go ahead and do that. It's actually a good document to have, whether the lender requires it or not. And it's a really simple 2-page document which just details the history of the business and the purpose of the loan and what they plan to do with it, use of funds. So it's just a kind of a financial request summary and a company summary at a glance in 2 simple pages. And again, that's the history of business form. I can send that to you if you, again, if you want to just have that at the ready, but it's not a requisite or required part of the initial submission. Here's another one, a resume form. The SBA typically, so in SBA loans, they typically require this. They don't always ask for it, but a lot of the SBA lenders that follow the strict guidebook from the SBA will require this form. It's basically showing or detailing or evidencing your client's ability to run the business, essentially. So it's evidencing their experience. So if you have, for example, a client who wants to purchase a convenience store or a pizza shop, then what you're going to want to know, or what the SBA is going to want to know, is, okay, well, what is their experience? What qualifies them to run a pizza shop? Have they worked in a pizza shop before? Have they managed a pizza shop before? Have they managed any kind of food services business? Do they have a history or a career in food services or food services management, perhaps? This is what they're fishing for, and that's what this document details for them. So essentially, it's just a resume form, kind of in the form of an application. And this, again, is something that you'll see required from time to time for various SBA products. Not all of it and not all the time, but just want to introduce you to this form again, so you can minimize the surprises and increase your knowledge of commercial finance and commercial finance submissions. What we're detailing here today, again, ladies and gentlemen, is a complete package. What makes up a complete submission package, complete file for submission for a commercial finance request. Lastly, I want to go over the fee agreement. At ERS, we need to have a fee disclosure, and this is a very important document because it's rife and riddled with and subject to all sorts of compliance and regulatory items. So we're going to cover it. Again, it's a pretty simple document. It's actually 1 page. I don't know why this blank page is attached. There's probably some runover as they were creating the fillable PDF right here, which generated a second blank page, but it's a 1-page document. And as the commercial finance advisor, it is imperative and incumbent upon you to get this document filled out and then signed by your client. So it's very simple. It's just a fee agreement or fee disclosure. And if you're familiar with real estate, it's kind of like a buyer's representation agreement where they're signing in advance, agreeing to give you, like say 120 days or whatever it might be to find them financing. And the fee, it details or stipulates the fee that they're going to be obligated to pay as a result, that they've agreed to pay. So, for example, in consideration of the services to be performed by ERS Nationwide Inc., hereinafter ERS and blank, that would be your client's name or prospect. Go ahead and type it in there. You can type in whatever you need there. These are fillable PDFs. You can't save it once you fill it out. You can print it or you can save it as a PDF if you have like Cute PDF Writer or something like that on your computer. But basically you just want to print it and have the hard copy for your client, but what will be returned to your hard drive is the blank document you see right now, so that every time you open it, it will be blank and ready for the next prospect, for your next client. It'll always be blank. So you want to put the client's name here. As I said here, for a period of days, applicant hereby employs for the period of blank days. For commercial finance, sometimes in buyer's agreements, it can be up to 6 months, 3 months, 90 days, whatever it might be. For the purposes of commercial finance, what we're doing here, I recommend you just write in 120 days or even 180. Commencing on. It's the start date is a day maybe that you're having to sit down with the client or shortly thereafter. And what you're agreeing to, what they're essentially employing you for, is that you will produce or find or source a lender ready and willing and able to extend the applicant a loan for the following terms and conditions. So again, you want to state here the borrower's entity name, not the individual. So what is the company name? You're going to want the full address of that entity, the business address. What is the amount of the loan? Again, this isn't written in stone. So if you write down 1 million and the actual need is 1,010,000, that's okay. So you're going to put a roundabout dollar figure here for the total loan request. Estimated interest rate for commercial, you want to put basically maybe 7%, 6.5%, so that they understand that when we come up with the average commercial loan, which is probably around 6% or 6.25% right about now, that you're covered because you didn't tell them in this document that you were going to get them a 4% interest rate, which would be ridiculous because that doesn't exist in commercial. So what you want to do is make sure you allow for a number that has you not over-promising and under-delivering. So you want to err on the other side. So you want to be able to basically under-promise and over-deliver. So if you put 7 here and you get them a 6.5% rate, that's all good. Keep in mind also that we do commercial. I'm sorry, not commercial. We do hard money as well. In hard money, you're going to want to put an 11 or 12 here, probably a 12. Now you can probably get them an 8 or 9, maybe even a 7.5% rate for hard money, but it can be as high as 10 or 11. So you want to go ahead and put a 12 here for hard money debt. Term, typically for commercial conventional, that's going to be either a 5, 7, 10, 15 year term. The average is 5 to 7. We've seen more 10-year terms now recently, but it can be amortized over, especially if they're acquiring real estate. They might have a 10-year term with a 15-year amortization, or a 10-year term with a 20-year amortization, or 25-year, or a 5-year term with a 10-year amortization, or they could have a 10-year term with a 10-year amortization, which means the loan is fully amortized. Again, don't overpromise and then underdeliver. So here on the term, I would go ahead and put 10. Amortization, I would put 15. That way, if we get them something that's amortized beyond 15, it's all gravy. Recourse, yes. Don't ever put non-recourse or put no. Again, if you overpromise and underdeliver, that's going to be bad, make you look bad. So there are some non-recourse loans out there for commercial, but it's such a rare flower that you shouldn't even bother looking for, and you certainly should not put it on this document. So recourse, you're going to want to type yes every time. Prepayment penalty, I would leave this blank because that's 50-50 depending on the lender and the loan product. You can leave that blank unless you know of something that you need to include in there. Applicant agrees to pay ERS a total fee of, this is the commission. So understand that this is the commission. So on SBA, that's going to be, actually, let me stay with conventional first, and before I get into a detailed explanation of the fees on SBA. So typically what you want to put here is if we're going conventional, we're going to try to collect 2% commission from the lender. And also a $1,000 processing fee. Now understand that this 2% or 1% or 1.5% or 2.5%, whatever's going to go in here, that's not paid into escrow cash for closing by the client. These are monies that are added on to the principal debt, so they will increase the loan amount by whatever this percentage or dollar amount ends up being. So they're borrowing that. Now you will be paid when the loan, this amount, or the broker will be paid this amount when the loan is funded into escrow and closed. So they will fund the principal loan amount plus this figure and anything else that's going to be funded on the back end of the loan, and then it'll be paid out of escrow. The $1,000 processing fee, first of all, it is not negotiable, and second of all, this is cash at closing. In some rare instances, we can get the lender to fund this as well, but typically this is going to be part of your client's closing costs, and they should know that. They don't need it up front. We don't work that way, but they do need to be prepared to bring that into closing with, in addition to other closing costs they are going to have, most assuredly. But this, in addition to those other costs, needs to be brought into title to close escrow. And we give them this in advance so they can start formulating an idea and to know how much money they're going to need to bring in to close their escrow. So that's it. That's the fee agreement, straightforward. Now on SBA product, it's important to note that the SBA has a requirement that they will not pay a broker, they will not fund, they will not securitize or guarantee funds from a lender to pay a broker more than 1%. So all you have the ability to put in here is 1. The SBA will, as a part of the closing and funding and documents, require an invoice from the broker and a couple of other documents that stipulate the 1%. Now, that's not to say that you can only earn 1% on an SBA loan, folks. You can earn more than that if you're gunning for 2% or 0.5%. The SBA only says that they won't pay or back funds from a lender to pay a broker more than the 1%. But then you can use this fee agreement to collect an additional, if you want another 0.5 point or another point from your client, then you can have this, and then you have to convey to them that they understand that it's total 2 points, but the lender is going to pay 1, and that or the 1 will be funded from the lender, but the other 1 they will have to pay. And again, that'll be added to what they have to bring in to close escrow. So in SBA, if you want to get something more than 1 point, then you've got to get your client to agree to do that. And they cannot write that check to you. It can't be a personal check. They've got to bring those funds into escrow to close, because a copy of this document will be sitting at title, and title will be putting this on the HUD as total closing costs. So if it's whatever the loan amount is, and you put a point here or 0.5 point, that will be cash that your client will have to bring in to close escrow, and title will ensure that they do so. So it can look like that, plus the processing fee and an SBA loan. And the SBA will have to prove this also. So you cannot put 3% here. Even if your client's willing to pay it, the SBA won't allow it. It's a protection of the client by the federal government. So the most you want to gamble and put here is maybe 0.5 point, maybe 3/4 point, even another full point. But the higher it is, the more scrutiny it's going to undergo. It may end up being, at the end of the day, something that stalls, delays, or even thwarts the loan entirely. So you don't want to be greedy and ruin the loan for your client and gouge your client because, one, the SBA won't let you do it. And you'll be severely fined and punished, and certainly fired from ERS if you're caught doing something like that. We don't tolerate it. The government doesn't tolerate it. Part of the new lending laws and protections for borrowers, and we just don't want to be known to be operating that way. So, and anything you submit will pass through me, so I'm not going to personally allow you to gouge your client either. I don't want to see anything here typically more than 1 point. And if it's a lower loan amount, you want to be considerate of that and make sure that you're not gouging your client. So if it's a lower loan amount, you want to have a lower figure here. So obviously on like a $200,000 loan, you're going to be trying to gouge your client for a total of 2 points, because remember, they're already paying a point on the principal allowed by the SBA from the lender. This is an addition to that. So if you put a point here and you're going to point there, that's 2 points that your client's paying. You've just gouged your client 2 points, 2%, plus the processing fee, plus the other escrow and title related and lender related closing costs that they would have to pay as well. So please be mindful of that. We're here to service the client and not gouge them. There will be future deals. You don't have to make all your money on one deal. So that is the fee agreement. Of course, the end requires execution, signature by the client. You are the commercial finance advisor, so you want to sign here, print your name here and date. And then this document will be sent to corporate. It'll be signed by the broker. Robert Doe will sign that, and then we'll get that over to title and escrow. So first it gets completed, signed by your client and you, and then turned in, and we'll take care of the closing execution of the document. So that's it. That is really all I have in the way of submitting a complete loan file on the commercial side. So here is the list of items, and I can send this to you as well. And really what I'm shooting for here is getting more quality in. Quality in is going to result in more closed transactions. You get quality clients who can truly qualify for the loan they're seeking, the finance they're seeking. They've got good business venture. The asset is sound and makes sense. Financial performance is there. The financial worthiness or assessment for the guarantor is there. We can make things happen. You get a complete loan package in, and you're going to start closing deals. That's simply the long and short of it. So again, it's been Dameon Russell. I've been talking to you about submitting a complete loan file for commercial finance. And as commercial finance advisors, I would ask that you please come back and watch this repeatedly. I'm recording it right now, and I will upload it to our EGU, Elk Grove U, YouTube channel, so it'll be there in the archives for you. Any questions? Let me check before I check off here. Okay, no, we're good. So I thank you very much for your attendance and look for your future excellent complete submissions. Let's get busy out there. Let's be productive. Thank you.